Hey, thanks for joining us, and don't forget to hit the subscribe, the like, and the notification button for more. Okay, everyone, myself and Patrick just been looking at some of the charts here, and I put out a podcast video a few months ago now saying just how ridiculous and scary these charts are, and I've been reviewing them again with Patrick, and I'm really the hairs are standing up on the back of my neck here looking at these charts. It started looking at charts which are local to me. So in the UK here, I spotted last year, in fact, that natural gas futures and electricity futures were doing some crazy stuff after the COVID crashes in 2020. The sort of historic norm in the UK here is for natural gas futures to be anywhere around about the 50 or 60 mark on this chart here. But just look what's happened. We've moved up and broken out beyond 60, beyond 70, beyond 90, 100, 200, 300. These prices that we're at now for natural gas futures, and I've been saying this for a long time, if we stabilize at this level and then have another leg up, it's disastrous. We could have stabilized at this level and then come crashing back down again. Quite clearly that was an option and a possibility, but we're breaking in the wrong direction here. We're breaking to the upside, and we've got winter coming to Europe in just a few months' time. We've got another couple of months of warm weather, and then we're going to have serious problems. This chart is projecting some terrible possible outcomes. Measured move there. Even if we get a quarter of the way through this measured move, we're going to see some serious, desperately serious knock-on consequences for the UK. Yeah.
Is there I know in Canada there's like rules that they can't raise they can't cut off electricity if you can't pay your bills during the winter months so people don't die. Is there that?
There's a thing called an energy price cap in the UK, and it's a cap that the energy companies put on. I think it's calculated on the average bill. So there's a certain average usage, and the energy price cap is calculated using that, I think. But it's gone up from somewhere below £2,000, somewhere around £1,500, something like that, I think it was. But it's gone up and up and up, and it's been beyond 2,000, 2,500. Now it's going up to over £3,000 now for your average consumer in the UK, and they're mutterings of anywhere between £3,200, £3,500, or even more if this carries on, of course. So there are many households in the UK that cannot pay those levels of utility bills. And of course, it's not just consumers, members of the public. We're talking about the energy costs to business here as well. So this is devastating news. And if we go on to the next chart, which I think is it's the German power baseload. I've seen this chart going around on Twitter. This is the futures for I think it's per megawatt hour, and the units here I'm assuming are in euros. It doesn't actually show on the chart there on TradingView, but you can see again this devastating move up from this very sort of long base where we had these sort of normal range of prices anywhere between about 20 and maybe 30 or 40 euros, as I say, I presume it is per megawatt hour. So that was the kind of norm. That's what a functioning energy market, and you can expect these sort of levels to gradually move up with inflation over time. But what's happened over the last year or 18 months or so, we've broken out of that 60 level, and we've gone up past 70, 80, 90, 100, 150, 200, 250. We're now heading towards 300. Again, the measured move here takes us to levels that, quite frankly, would cause a Europe-wide crisis. Why do I say Europe-wide? Well, Germany, if Germany catches a cold, then the rest of the European Union is going to catch it as well. This is a crisis of historic proportions developing here, unless these levels start to normalise pretty rapidly, bearing in mind, of course, that we have that winter season ahead of us. These are unheard of prices in the charts here, and unheard of projections that we're seeing here. Even if we get a quarter of the way along that projected path, then this is going to be devastating and cause a real energy crisis. I mean, the parallels between this and the 1970s actually are starting to become very, very obvious. Of course, the oil crisis in the 1970s, we saw high inflation. We saw precious metals taking off with a very large dip initially, pull back, and then some very large uncontrolled moves really in many of the markets. Saw the stock markets topping and then falling and going sideways for many, many years, in fact, and particularly compared to inflation, the general equities and stock markets went nowhere for over a decade. And that was one of the reasons why, of course, precious metals performed so well. Huge rotation away from general equities into commodities. And does that sound familiar? Certainly sounds familiar to me. This analog is starting to get quite scary. And of course, in our globally interconnected world now, which is something that has developed in the last 50 years, the knock-on effects of all of this are pretty unimaginable. Countries with commodity currencies, I suspect, are going to do very well because as commodities take off, the likes of New Zealand, Australia, Canada, all of these economies that have a strong base in commodities, mining and production, will fare particularly well. But of course, the Eurozone, the United Kingdom, and others, Japan, suffering as a result. Could probably include South Africa in the commodities category as well, and there'll be others as well, no doubt. The next chart that Pat's got there as well, we've got a couple of more charts here. We've got the Dutch natural gas futures, just to show that this isn't limited to one or two countries. So Holland, incredible moves there. We've moved up from the 17 euro mark, 20 euros, all the way up to 20, 30, 40, 50, 60, 80, 100, 110, 140, 150, crazy. 200. You know, these numbers are going up logarithmically now. You know, we've gone up from single figures to double digits to triple digits. This is a truly logarithmic move to the upside, and it's a parabolic breakout of the sort that you only see probably once in a human lifetime. I mean, these moves are gargantuan and devastating.
You see it when I put on the linear scale. You see, for years it was pretty stable, right? But then it's just violent there, just violent. Like, ooh, it's. I just hope the Dutch, like, they won't have their electricity cut off during the winter months if they can't pay there. Super scary.
Well, each country within the European Union will have its own rules and regulations within the EU framework. I'm certainly not an expert on power and energy law, but one thing I do know is that the EU as a whole and individual countries within the EU trading bloc have got a massive, massive problem here. You've got to expect some very, very strange stuff to be going on in the next few months, and strange and scary as well. This is not to be taken lightly, and needs to be shared and spread, and the awareness needs to be out there, because in whatever way people can prepare, they need to be preparing for this. You know, it depends on your living situation, you know, where you are, if you're living in a city, or if you're lucky enough to be somewhere where you can gather, you know, firewood and generate your own heat and power. But I suspect we could be looking at energy rationing, something that we haven't seen in the modern world in Europe for in the European Union for decades. This is serious stuff. The final chart there that Pat's got teed up is initial claims. So we had a PPI chart, and PPI chart there, Pat, or did we not have that one? But PPI, of course, producer prices are going to reflect all of this, because producer prices are affected by you know, the input costs, and energy is a huge input cost for manufacturing. So this kind of explains why PPI is taking off in a parabolic fashion as well. So the yellow coloured graph there is producer prices for the United States, and you could pull up a PPI chart for Germany or the United Kingdom or any of the European countries, and they all look exactly the same. They're all taking off like a starship. And these aren't just prices of cryptocurrencies, you know, which you expect sometimes to go parabolic or to drop like a rock. This is major economic indicators. You know, you just don't get this happening on this kind of grand scale.
And I'll show you something. People who say that everything today is there's algorithms and computers. Well, look, back in the 70s, there was no computers and algorithms, but all this stuff moved in the synergy. There was worldwide inflation in the 70s for everybody, like all the G7 countries, they all had it. And there was no algos or computers back then. So to think that this is not worldwide, and look at this, I put the Japan one because the Japan one, think about it, they were practically one of the only big G7 countries that was able to contain inflation after the 1970s, after like their massive inflation that they had in the 70s all the way 80s. They were practically the only country that was able, but look at that. They broke out of a 40-year base, Kevin. So if Japan, the country which has not had inflation forever, starts having inflation, then yeah, we're in a heap of trouble.
Yeah, it's like all the the countries that weren't immune to this have been heading in an inflationary direction for the last few decades. But even the country that was seemingly immune to inflation has succumbed to this virus, and this is not going to end well. You don't need me to tell you that. These moves are of historic proportions, and the jobless claims in the US, the black line on that chart there, the black graph, you can see the jobless claims spiked, of course, during the COVID, whatever you want to call it, COVID panic, and then fell all the way down to the bottom of the chart there. In fact, it fell to a level that we have barely seen before. But with everything that's going on at the moment, you have to ask the question, how much is what's happening at the moment with energy going to kill consumer demand? The average consumer is going to be completely tapped out. They probably spent most of their money that they saved during the COVID era, the COVID checks and everything else. And as that runs out and reality starts to bite, and the bills start landing on the mat, then people's ability to be strong consumers and to go out there and spend money and spend our way out of this is ebbing away all the time. I mean, here in the UK, paying £3,500 annually just for your energy bills, and then you've got to put fuel in your car, and your cost of fueling your car has gone up by 100%. Then, people are left with very little money to go out there and spend on the high street, Main Street, as you would say in the United States. So, Main Street is going to suffer, and that's going to have a knock-on effect as employers start to tighten their belts and reduce staff. Also, bearing in mind that we've got issues across Europe with lack of staff already after the in certain sectors after the COVID crisis as well. So some sectors haven't fully staffed up after that. Thinking here about hospitality and tourism, still a lot of gaps in employment there still to be filled, and with these problems brewing, we're looking at some kind of crisis that, to be frank, the world hasn't seen for 50 years.
Yeah, look, just very sobering. I just did this chart now while you're talking. So inflation cycle, the PPI for all these big countries, and initial claims skyrockets. Lots of people unemployed in inflation cycles. Here it goes pretty much sideways with secular up, some cyclical stuff for about 40 years with disinflation. But look at that. This was a wake-up jolt in 2020 March. But from the looks of it, if PPI is breaking out, we can anticipate at least a strong move up in initial claims all the way to this resistance area. And I think if it breaks above this, Kevin, I might have labeled this wrong or correctly, but this is probably hyperinflation, what it's going to do once we break out of this area.
Well, what we've got at the moment is inflation morphing into stagflation. So we've got inflation, which is rising levels of rising levels of inflation, as opposed to the disinflation that we've become used to. Disinflation is where you still have inflation, but that inflation number is going down. So it's gone down from 3% to 2% to 1%. That's disinflation. If you go below zero, then that's deflation. So I just wonder if we're going to see this inflation pushed to whatever level it's going to go to in the immediate future before some kind of deflationary collapse as the consumer just vaporizes from the scene, and there's no demand for much of anything, and then some kind of hyperinflationary event after that. So this is all pretty extreme stuff, and it's kind of what I'm describing is extreme volatility in one direction, then in another direction, and then in another direction. So this is really the system shaking itself apart from all of the excesses of financial I don't quite know how to phrase what the Federal Reserve and the central banks have been doing over the last few decades, but it's been increasingly crazy. The rate at which money supply has been increasing, and the rate at which the printing presses have been whirring. So that debt creation and monetary policy, it's coming home to roost now, and this is kind of the effects of all of that, and it's been brushed under the carpet for long enough. And it seems to me as though the system itself is now starting to shake itself apart, and the central bankers and the Federal Reserve and all of these people are in danger of effectively completely losing control of this, unless they've got something up their sleeve which I'm not aware of.
Yikes! All right, Kev. So let's send out this video to all our followers on YouTube. There, they could get that. And if you guys aren't subscribed to our YouTube channel, please subscribe and like and get notified there when Kevin and I there we have these brainstorm sessions, and we just feel that it needs to be shared.
Yeah. As I say, this was just a discussion me and Pat were having, and then Pat just said, right, we need to record this and probably put it out there. So we've done that for you. Hope you enjoyed it. If enjoy is the right word, but I hope you appreciate it. And yeah, we'll speak to you again soon.
Take care.
Bye.